We've got yet another major transaction on our hands within the mining sector. This one, again, is focused on the royalty and streaming space, which is a sector that seems to continuously consolidate these days. The latest deal will see Royal Gold acquire not one, but two names in the space, with Royal having come to an agreement to acquire both Sandstorm Gold royalties and Horizon Copper. All told, the arrangement here is set to add a whopping 40 cash flowing assets to Royal's portfolio, while setting them up for further success down the road at the same time. All right, folks, let's dive in. The proposed transaction here, which of course remains subject to shareholder approval, is set to enhance Royal Gold's dominance in the space, which might be why the Sandstorm transaction is contingent on the Horizon transaction closing. The arrangements collectively double the number of cash flowing assets within Royal's portfolio, which goes from 40 to 80. Those additional assets add between 65,000 and 80,000 gold equivalent ounces of production to Royal's portfolio this year alone, which on a midpoint basis equates to a 26% jump in estimated production for Royal. All told, on a pro forma basis, Royal will have 80 producing assets, 47 development stage assets, and 266 evaluation and exploration stage assets, for a combined total of 393 streams and royalties. Royal also remains precious metals focused, with 87% of the portfolio focused on precious metals, while gold itself is expected to account for 75% of total revenue, yet the portfolio is diverse enough that not one asset will account for more than 13% of total NAV. And with those development stage projects, this focus on precious metals is expected to only increase. In terms of regionality, 41% of Royal's portfolio will be concentrated in Canada and the US, while the remainder is said to come from countries where mining is a welcome and well-established contributor to local economies. With that in mind, let's take a brief look at what Royal Gold expects to be their premier assets on a go-forward basis. Okay. So Royal Gold has identified 10 key assets within their portfolio on a post-transaction basis. Of those 10, 4 are brand new to the corporation through the transactions with Sandstorm and Horizon, while a fifth has seen certain interests expanded. That, of course, leaves a total of 5 of the top 10 assets that Royal is bringing to the table for the pro forma entity. 7 of those assets are currently producing. Starting with the producing assets, the key asset here is the Mount Milligan stream, with that mine operated by Centerra Gold. Royal currently has the rights to purchase 35% of payable gold production here for just $435 an ounce, alongside 18.75% of payable copper, which they just pay 15% of spot for. They also have a 5% free cash flow royalty that is payable once certain delivery thresholds are met, which can increase to 10% in some scenarios. For reference, guidance at Mount Milligan is 165 to 180,000 ounces of gold and 50 to 60 million pounds of copper this year. Next, in terms of key assets, is a royalty on Barrick's portion of the Pueblo Viejo open pit JV in the Dominican Republic. Royal holds the rights to purchase 7.5% of gold produced until 99,000 ounces have been delivered, after which that royalty steps down to 3.75%. They also have the rights to 75% of silver, which later steps down to 37.5%. Royal pays just 30% of spot for those ounces in both instances, which increases to 60% after certain delivery thresholds are met. Current guidance suggests that the mine will produce 370 to 400,000 ounces of gold this year, with no silver guidance provided. Royal also holds various royalties on the Cortez complex in Nevada, which is operated by Barrick, which is expected to produce up to 765,000 ounces this year. Royalties here are a bit sporadic depending upon the different claims involved, with Sandstorm set to add a sliding scale NSR royalty of 2.25% to the mix for the Robertson development project here. Another major asset brought to the table by Royal is the right to purchase 100% of the payable gold produced at Teck's 90% owned Andacolo project in Chile. Those ounces, which are guided to come in between 35 and 39,000 ounces this year, are purchased for just 15% of spot. The stream will reduce to 50% of payable production once 900,000 ounces have been delivered. Next is the right to acquire 100% of payable silver from the Zone 5 mines and Mango Northeast deposits at MMG Limited's Khoemacau mine in Botswana. The stream will see 40 million ounces delivered at a price equal to 20% of spot, after which the stream reduces to 50% of payable production. 2025 production here is estimated at a midpoint of 1.4 million ounces. And then there is the Wassa mine in Ghana, operated by the Chinese-owned Chifeng. The 200,000 ounce a year mine sees Royal Gold own the right to 10.5% of payable production, which they pay just 20% of spot for until 240,000 ounces are delivered. Finally is the Antamina mine, owned by a consortium consisting of Glencore, BHP, Billiton, Teck, and Mitsubishi. The mine, which produces 335 to 400,000 tons of copper a year, will see Royal Gold acquire 1.66% net profits interest through the acquisition of Hyland and Sandstorm, who effectively jointly own that interest. One of the major allures to this entire transaction for Royal appears to be what is up and coming. Of the 3 up and coming development assets identified as key assets, all of them are new to the company as a result of this merger. First on the list here is Glencore's Mara Brownfield copper gold project in Argentina, which is expected to produce 200,000 tons of copper equivalent annually over a 20-year mine life. Sandstorm currently owns a 0.25% NSR royalty here that they can elect to convert to a 20% gold stream with payments equal to 30% of spot, for a maximum payment of $225 million, which would be paid out in tranches over the course of construction. Second is Hod Maden, a Turkey-based project being developed by SSR Mining. Thanks to the acquisition of Hyland, Royal will hold a 30% non-operating interest in the project alongside a 2% NSR royalty that Sandstorm brings to the table. The mine currently has an initial life of mine of 13 years and is expected to produce 195,000 ounces of gold annually. Well, not mentioned in the news release, Sandstorm is also said to hold a stream of 20% of gold at 50% of spot until 405,000 ounces are delivered, after which it reduces to 12% of gold at 60% of spot. Lastly is Ivanhoe's Platreef development project in South Africa. Currently under construction, the mine, once all phases are completed, is expected to process 10.7 million tons of ore a year. Sandstorm holds the right to purchase 37.5% of payable gold until just over 131,000 ounces are delivered, and then 30% of payable gold until nearly 257,000 ounces are delivered, with the company to pay just $100 for each of those ounces. All right, let's get into the terms here. First off, Sandstorm Gold is being acquired for $3.5 billion in the form of an all-share transaction. Under the terms of this transaction, Sandstorm shareholders are to receive 0.0625 common shares of Royal Gold for each share of Sandstorm currently held, which translates to a 17% premium to Sandstorm's closing price on July 3rd. Post-transaction, Sandstorm shareholders are expected to own 23% of the resulting company, while current Royal Gold shareholders will own 77%. Horizon Copper shareholders, meanwhile, are getting a much higher premium, but are being left out of the future upside here. Horizon is being acquired for all cash, with shareholders to receive $2 Canadian for each share of Horizon held, which amounts to a premium of 72% versus the closing price of the company on July 4th. The purchase values the company at about $196 million. The transaction, of course, remains subject to shareholder approval alongside court approvals, regulatory clearance approvals, and exchange approval. The Sandstorm deal is also contingent on Horizon closing, although that requirement can be waived by Royal Gold if they so choose, while Horizon's closing is contingent on Sandstorm closing, with Royal again having veto rights on that requirement. As it currently stands, the transaction is expected to close in the fourth quarter of 2025. All right, so let's wrap it up. The sale of Sandstorm, if we're being honest, is a bit of a shocker. This is a name that has been built up over the last decade and a half by a capable management team that looked like they were in it to build a giant. That being said, the royalty business isn't an easy one, and it's not overly surprising that the sector itself is seeing consolidation. Precious metals are at all-time highs, and if you want to sell out, now is the time to do so. All right, everybody, thanks for watching. And if you're wondering about my background here, that's because we have traveled to Boca Raton for the Rick Rule Symposium 2025. So if you're on our channel, you're going to see tons of content and interviews with some pretty big guests because, everybody wants to talk small cap, Steve, let's be honest. But as you can see, we're still taking the time when a big transaction happens, like what's happened with Royal, Sandstorm, and Horizon, to get you guys the story so that you guys have that breakdown you need for doing your due diligence. All right, everybody, thanks for watching.